Hello, this is Cynthia Fick, and this is the March 18th stock market update. Well, last week was really challenging for the market. We had the S&P and the NASDAQ both in correction territory. The S&P 500 on Thursday was down 10%, and the NASDAQ was down 14%. Then the market was very oversold, and so they tried to rally it both Friday and yesterday. And today the market is down again. So any kind of rally we get is kind of natural response for the market when it's oversold, but we're going to check them to make sure they're not a head fake. So in the meantime, we're having a Federal Reserve meeting tomorrow, and they're going to talk about whether they're going to do anything with interest rates. There's a 99% consensus that they will leave interest rates the same. In the past, especially the last decade or so, anytime there was a dip in the market, we kind of rushed in to buy the dip, they call it. But right now, with all the policy changes that are going on, there's just so much uncertainty about how some of these changes are going to affect corporate earnings and the growth of our economy, that it's just better to be a little bit more cautious in getting back into the market and to wait and see if we need to get more defensive. Those are the kind of things we're watching, and I'll show you a couple charts that see how they're looking these days. So S&P 500. And I mentioned last week that it has broken through the 200-day moving average. That's a little different than the last 10% drop we had in 2024. We got nowhere near this 200-day moving average, and we've broken it, and so far haven't seemed to recover from that. The next thing I want to show you is the bull bear indicator. It looks a little different, but I told you we were right in the middle between bull and bear. Last week we were clearly in the bull category, meaning buy, stay in the market, and we were kind of dipping down close to the bear market line to say, it's time to sell, get out of the market. So those are the things we're watching. Many, just a couple of many that we're watching to see how the market's doing in here. We are kind of primed and ready to go. If we need to get more defensive, we'll let the market show us what it wants to do, and slowly, if need be, talk us out of it. So that is, update on the market, and we will talk to you next Tuesday. Have a good week. Bye-bye.